Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube in the Bookmap Discord Trader Lab community? Marty, there you are again. Thank you. Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube in the Bookmap Discord Trader Lab And how we doing in YouTube? You guys can hear me and see things? Okay, great. Well, good morning, everybody. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. We have a pretty active market. I want to get into it right away for you guys. So I'm going to get right to it. We've got a lot of activity, and I'm going to give you an overview starting with the higher time frame. So grab your pen and paper. You're going to find what auction market theory, how the volume profile can help you get in alignment with the market. The stream is about market mechanics. I review trades that are structured trades that are available to everyone in the Bookmap Discord Trader Lab community, as well as a library of webinars, and of course the community, and there's no cost for this. The idea of this stream is to help you understand markets, how they work. And most retail traders really never get to understand market mechanics. They're looking for external indicators to define market mechanics. However, I think if you understand how the market works, you could certainly do a lot better knowing how the market might set up so you can actually deploy an indicator in a productive fashion instead of just randomly throwing the mix of spaghetti together and throw it against the wall and see if it sticks. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. This is for educational purposes only. If I get into real time, we'll talk. You guys should be reviewing my streams on a daily basis. They're available to everyone in the Bookmap Discord Trader Lab community because the market is a continuing narrative. What happened yesterday does matter for today. And of course, what happens today matters for the moment and for what might happen on Monday. So let's take a look. First of all, I got a lot of things to go over. The first one is I want to let you guys know multi-trading is now come to Bookmap. That means those of you who are using funded programs have the ability for trade synchronization, and it's all in the knowledge base, multi-account trading. How does it work? How do you configure it? All this is available. If you're not familiar with this, or if you're using a funded account and you want to trade directly from Bookmap into your funded account, you can now do that. And that is available in the current version 7.6. So by all means, check out the knowledge base. And if you're not a Bookmap subscriber and you want to be able to execute off of Bookmap using order flow, this would be the first thing I think you want to take a look at. And if you're not a Bookmap subscriber, you certainly might want to kind of dig in a little bit here, follow the stream, and attend the other education on order flow and see if it might help you create an edge. Now, let's go take a look at the higher time frame and a couple other pieces here. First of all, grab your pen and paper. This is the higher time frame. This is the auction. You're looking at this, and you're probably going, hey, what happened? Let me explain what happened. This is yesterday. What we have going on in these 3 days is overlapping volume. Now, the volume profile, what is this all about? Very simply, it's an auction. And what the market tends to do, so you know, is it's checking prices. What's too low? What's too high? So what happened over here? Then we have FOMC. Well, what happens FOMC? It was mostly shorts all day until the end of the day when the shorts got squeezed out. So we're just looking at what's going on here. Market goes up. And this is resistance right there, by the way, which we hit on this day. That was a short. And then it came back and squeezed. The low of the day, so you know how the auction works, 26 was a target on the downside, the highest volume on this day. So what we had was resistance here, would set up shorts in the morning, target there. Not so bad, huh? Now, nobody knows at the time that this is going to be the low of the day, but we have structured trades in TraderLab. If you would be covering your shorts here, and you're going to see how this ties into the day, you might be getting long there and then squeezing out the shorts. Then we have, okay, and we close up in here. And we leave a naked volume point of control right there, the yellow line. Remember, yellow line was there. Yellow line is here. Okay, so we open FOMC day. Where do we go? Right here on the open. What does that set up? Shorts all day. What happens at the end of the day? Short covering. Now, I'm showing you auction mechanics. This is structured trading. This is what we do in TraderLab. Now, we can't predict anything, so you're not, if you, by the way, if you could do that, come to TraderLab, show us how to do it. But in the meantime, until you show up and help us with that, here's what we know. This is an outside edge because we rejected it. You got a wick and a wick. What does that say? There's a buyers in here. Now what happens yesterday? Same thing. We open, we get sellers, and we get buyers. And we have pretty much what's called a neutral configuration. In other words, both sides active. But what else do we have here? Another tail. And now if I put the volume together on these 3 days, this line here, 77.5, is a high volume area. And the way the auction works, very simply, is shopping. Now, you need to come to TraderLab if you really want to drill into this. I can't go over it here. We'd spend a few days or longer. Now, here's another thing. The highest volume price from this day is right here, roughly 99 quarters. So that's your retail price. And we have yesterday's high over here. Now, let me drill in a little bit for you. And if you have questions, please post them. This is the same chart, but I'm going to drill in. So what does that tell us? It says we tested this here. Nobody knows, by the way. This is the retail price from this day. We took it out. Where are we going? I don't know. But then we have a tail, and then this is like a neutral thing. You've got sellers up here, you've got buyers here, but what do we know? We have closed higher than this day, and we have our retail price at 99.5. Now, you'll see all of this on Bookmap. But what does that tell us, though? See, this is the language of the market. It says to us that at the moment, that was too high. We tested it here, set up our shorts. Okay? So far, all fine. This is too low. That's set up shorts down to here for longs. Over here, this is the retail price. We get under it. I don't know. Was kind of thinking it might come to there. Didn't do it. Doesn't matter. And then we come up here and squeeze out the shorts in here from the downside. And we came up, of course, over here because there's buy stops. So what's above the high? Buy stops. And under the low, sell stops. So we know today, possibility with these wicks that we might go higher. And if we do go higher, where's our resistance? 26.75-ish, 26, I'm sorry. It's actually 20, I think 27. It's covered up. That was the actual price when I did this. And this was done before RTH open, probably posted around 6 a.m. or so. I don't remember. So 27, the next target's 48.5, and this is what's called structured trading. Now, I'm going to show you now, so what did we do? We gapped into this location, and I'm going to show you in Bookmap, pulled back, and then where are we now? Target, 48.50 is the target. And this is the current retail price, this yellow line. But that was our target. This is auction market theory. So, and what is the auction? It is really the basis of our market. That's how it works. And all our indicators and everything we do are trying to get us in alignment with the market. Now, let's get going. And again, if you have questions, please post them. By the way, this is yesterday's high. That's going to be a gap, right? So we're just going to throw a little gap thing in here, just in case. Whoops, sorry. So we got to remember, this is an unauctioned area. The market might come back, might do it today, might, it probably will come back to it at some point. And this is the current low of the day. So we have a gap here. I'm just putting them in because the market can do anything at any time. Why is that? Because we can't predict anything, and the market responds to new inputs. The inputs are participant behavior, and the other inputs are fundamental events, whether it's news, somebody trips over the cord at the CME, which has happened, I think, and whatever else. So let's look, RTH open. Now, I had a hard time in the open, and I'll tell you, I know why in hindsight, but I certainly didn't quite get it as far as what might happen. So this right here is it's called the developing volume point of control. Now I'm still in the ETH. So what this is saying, and think of this as language, is that in the ETH, this is too low because the developing or the overnight volume point of control is I'm sorry, wrong location. Let me come back here, guys. Sorry. This is the overnight volume point of control. This is our retail price. And what the market tends to do, there's a couple possibilities. It can come back to check it, which we have a high probability. I'm going to give you some statistics, and you have to vet every statistic for yourself. So I'm looking for it to come here. And this sets up something called mean reversion. Now, I don't want to confuse you, and it's easy to be confused, because when we trade, we're actually trading multiple time frames as you think of them. Now, I don't think of them quite the same way. I think of them as fractals. Now, the higher time frame is a higher time frame, fine, RTH candles. But once you get into intraday, whether it's ETH or RTH, we're trading levels, but in the microstructure, we are trading what's happening right here. And that's what order flow does for us. It gives us a sense of behavior. So I come down in the ETH and I have yesterday's high. So in the ETH, I'm coming down and I'm testing this level. This is my retail level from the ETH, so highest volume. Notice it's in alignment with that 27. That was a major area. And so this is saying this is the highest volume. And the way I relate to this, and really what auction market theory is shopping. You go to the store, you pay retail. If it goes on sale and you think it's worth this price for an S&P, that it's worth 27, and they put the price down on sale around 18, would you buy it? If you think that might be the fair price, because that's where the volume is. Remember, in the store, high volumes retail. Buyers and sellers agree to do business. Well, if you come outside, away from the price, and you buy it, the sellers, if they perceive demand for their product, are going to raise the price back. So this might be too low. When the price is on sale in the store, it's not permanent. Typically, it's temporary. So you throw a couple more in the cart. That's what this is. Then we have the potential to come back to retail. And if the trend is up and the prices have been increasing, which I showed you in the higher time frame, then potentially we can go up to a previous price that was too high. And that's our naked volume point of control up around 46-ish. So let's see how this plays. So I'm looking for longs, RTH open, and statistics. Sorry, we're opening higher outside of range, and you got to vet these. There's a 93% probability we'll take out either the ETH high or low. I don't know about you, but I'm leaning towards the ETH high. That might happen before we go to ETH low. It is sitting right there. So that's a target. The overnight volume point of control, which is there, sorry, that is the overnight volume point of control, 79% probability. Huh. The first hour's high, which is going to become something called the initial balance high or IB high, you'll see it at 68% probability. Getting to the previous high or low is at 63% probability to go there. So this is at least the opening. There's more, but we'll start with this. So this right here might be, this is the new developing volume point of control. This is the previous price. I'm trading towards coming outside, okay? So I'm trying to get back here. So let's look. RTH open. I see a sweep. I see buyers. I'm going, okay, where can I get long? So I'm looking, and the thing about the open, it's a very aggressive trade, and I always suggest in Trader Lab, this is the last place you want to trade. You want the market to set up. So, because when the RTH open happens, we don't have any current behavior. We have ETH, which is the last auction, and then we have yesterday's RTH. So we're going to lean against those structures. So we're really kind of flying in the blind here with minimal information on the current participant perception. So right here, I see we come in. I know we had some support over here. I know I got resistance up there. And I'm trying to go here. So right here, I see long. I come up. I come back here. I get long in here against this. And I have to get, and I'm trying to go here for the probability. So this one, I hit the developing volume point of control, which is resistance. I bounce off it. I take a stop. Okay, that's me. Who knows, right? I don't claim anything more than I just trade and the chips fall where they may. I come out here. Now, when I come out here, I'm thinking this is too high. Now, I came up here. I didn't get my scale. Came down. Boom. Down here. So this is me. I'm one of those guys right there. 63 stops. So I get taken out and then out. Okay, so out. So the long is here, right there, and your stop needs to be under here. Okay, so this is your long or this is your long, but the stop has to be below the opening swing, under this swing here, right here. So I looked at this as support, this little structure in here. That was support, little structure in here. We're in the RTH open. Support is here and here. I just want you to see what was here. Now, I'm also going to draw a little line for you here. Now, I got fooled. Happens all the time. Part of trading. So I took my stop, okay? So now I'm looking at this. I'm going, all right, where's my resistance? Well, my resistance is up here. This green line is representing the volume, the high volume that's taking place in these micro structures. And this green line is now resistance. Okay, so I get taken out, very excited. And of course, I'm taken out near the low of the day. I shouldn't say, of course, I said, but sometimes you feel like you're a victim in this thing, and you're really not. But who likes that, right? Especially when it's like right there, I mean, I can pick the low of the day. Usually it's me, or often it's me and my stop. So that creates frustration and anger and psychological problems. So I come up to my resistance. That's what this is right here. And so I'm looking at this and I'm saying is right here, and I'm in detail, I know, VPOC migration. So this might be too high. Okay, right here. And then I break high. As soon as I break high, I have a trigger. And the break high, the trigger, and there's resistance, but I have VPOC migration. I'm using multiple time frames, if you think of them, or fractals. This is resistance, but in the developing time frame, this thing, and you'll notice the taper at the bottom. The taper is saying there's a sense of urgency. The market is not spending time here. There's something else to know. When you have this kind of rotational thing going on, it's really a consolidation. So we have the outside edge here, and we have our resistance up here, our top end, where the sellers were active, up in here. So what this creates is something you guys may have heard of. Besides consolidation, they call them coils. And a coil is a compression of energy. And if we think the market might go up based on all the information I already shared with you in the higher time frame behavior, then we want to be looking for longs. And of course, it can come out the bottom, right? But what do we see? Two-sided trade here. I mean, and it could just as well come up here and fall down. So when you put your trade on, you put your helmet on. So right here is a Trader Lab structured long. So I took this one, and I have to scale here, and then my next target is over an ETH high. And then it's wherever. Watch. Scale. Okay. So long, scale. Next target is here. Remember, over 90% probability. You got to vet that for yourself. And then we're going for 47. Let's watch. Mid VWAP. And where's my support? Let me again mark these things for you guys. So this is what I know. I know this now is too low because I'm above it. And I know this down here, it's too low. So I have my support. This became resistance. We broke above it. It is now support. I have variable high volume node here. I got to label it. One moment. Got to stay current here. So this is a process. And what I do with this process is I am narrating the developing condition of the market. And it's a constant developing process. So I have to try to stay in alignment. That's why if I see the long here, I can put my stop under here. This is now support. And this can become support right here. Let's watch the behavior. Now, I don't know what it's going to do. If you do, you let me know. We are in an environment of 100% randomness, which is very disturbing to us because of the uncertainty. Watch. Support's here, and now support is there. Support is there. See it? So for me, I have this level under me. So let's look at a little order flow as long as we're hanging out here. So this is too high, microstructure, resistance, and where's support? Here. What do we look for? Well, we currently want to be long, maybe, if that's your plan. So I know I have resistance here, and I have support there and there. Let's look at the behavior. Support is there and there. So this, and I'm trying to get to there. And again, where's my resistance? It's this. Now we rotate. If you're managing your trade from here, you'll get taken out there. But we are in a rotational trade, okay? So if you get taken out, and this is something that's going to happen to all of us, and now you come to a level, and why don't we go down here? Got a red bubble. Because I had buyers here. Now, the fact we come down, all that is there's stops sitting under here. And the joy of trading is not knowing. So you can't know. You know what might happen if you're in Trader Lab, but you don't know what will happen. So this is why in a trade plan, you have triggering structures, locations, targets for scales, you know, and I always go a little ahead of it. And then if you get, and then trade management, you get taken out, but you think the market might go up, and you come to a level, and right here you don't know, but let's open this up and look at the order flow. Right here, it could just keep going, right? Well, I come to a level, I have a seller, I have sell stops, I have a buying iceberg. This is absorbed. Now, right here, no clue. I am the clueless. What do I know here? I'm going to go to microstructure. Sellers are here, sellers are there, sellers are here, sellers are in control. Okay, going to 0. Rotate here. Right here, I have volume. Sellers are there, and the buyers are here. I rotate up. As far as I know, going to 0. Sellers are here. Sellers are there. Sellers are there. Sellers are, sellers are here. The buyers are here. These guys are about to get run over. Get the spatula. We're going to get them off the pavement. Sellers are here, going down. What happens? Why is this not going down? Now, right here, I have no clue, no idea. I'm just going, oh, this looks terrible. We're going to fill the gap. All the things you say to yourself. Me too. Except buyers take over here. Now, what do I know? I know now that this is too low. And if I go down in fractal, this little microstructure right there is too low because this is a consolidation and we just broke out of it. I'm going to draw a little line around it just so you can see some of this stuff. A lot of lines, no time. This should actually be a little, let me just adjust this a little bit. You see, what I'm doing is I'm looking where and I don't know this until it breaks, okay? The sellers are here. There they are. The sellers are here. There they are. We're going down until we're not. And the buyer is above that seller. That's my first clue. Now, I don't know that just because we get a buyer here, we may come up here and these sellers may whack that buyer and we come down again or break out down here. There's now buyers here and there's sellers there and sellers there. And we got this guy. Now, right here, it's like, what are you doing? I'm up and I'm going, this is interesting. And where's the sellers? Here. What happens? Buyers are above this guy and this guy. Buyers are here. Buyer is here. Clueless. Break. Trigger. Now, enter here or here, and the stop goes under there. Let's just watch. Now, you have to practice triggers, right? And where are we trying to go? Now, I posted in Trader Lab that this liquidity was stacking. In fact, this liquidity's been in the book, if you look, going all the way back, to early this morning. In fact, I posted, we were actually talking about shorts off of this early this morning in the ETH. So where are we trying to go? Here, next target, right? Scale. Long. So you could be, when you see this, you have choices. You could scale as soon as you get a selling trigger, or you're just keeping your stop under here and you're going with the statistical probabilities. Once you get above here, then it opens the door. So let's look. So here we have a sweep. When we get a sweep, it suggests the possibility for a counter rotation. You would learn this in Trader Lab. Now, let's look a little further what's going on here. This was a balanced area. In other words, rotation, compression, a coil. This was our target, the retail price from the ETH. This is the fair price. If we can buy it on sale, wherever that is, we can come back here. High probability statistic to take out the ETH high. So if you're taking longs, you're targeting this probability and this probability, all up to you in your plan. Once we come out above the ETH high, we now have our targets here. Okay, 48.5. I showed all this at the top of the stream. By the way, if you're late to the stream, you can review the stream if you're in Trader Lab. It'll be posted in there. for Trader Lab participants for this weekend to reverse engineer these structured trades, review screenshots, build out your plan. This is what it takes if you want to be in this business. It's training. You train yourself to read the behavior. So since I don't use indicators, I'm always right here going, what does it say? And then I interpret it. And sometimes, whatever happens, happens. Because I know right here is very important. Let's look also at the structure. So here's what we know. Right here was volume. And it creates a high volume node, which is what this is. So that's an outside edge. I'm going to mark it outside edge. In other words, too low. What happened here? Support. So what does this become? Maybe support. And then we have more volume up here. Let's mark this one. Let's just see how this works. And let's come over here. What's out here? Well, we have two situations here in the profile. When you have a consolidation, it's a chop. The market gets directional and then it pauses. And it can break out to the downside and counter rotate, take some stops out. Thanks for playing. Or break the other way. I couldn't tell you which one. It's not my job. My job is to stay in alignment and know what it might do, not what it will do, because I can't know that part. So all I can know is what it might do and where it might do it. Where it might do it here is out here in this outside edge because of this acceleration. This is not auctioned. The market ran. It creates something we call a low volume area. And low volume, in other words, the run is not high volume. It didn't auction. When the market pauses and chops, it creates volume, and it looks like that. Well, in this area, there's no volume. So that means urgency. So if I come back into this area, I know this was the last retail price, and then we left it. So if it comes out here, I can get long, and it sets up a condition in an uptrend, something called mean reversion, which is outside in trading. So it's a different plan inside of a plan. Let's see what it does. So I get my chop. Oh, now I break low. What do I know? I know this is my outside edge, and this is my high volume node. This is the same thing as the target above, which is this, called a naked volume point of control. A point of control is high volume. But since we're trading in something called fractals, the market's behavior doesn't care about the range of the rotations. We do. If you understand how the market works, not what it'll do, because this is what I know right here. What I know is it's either, I know, and this is going to sound so smart, it's either going to go up or down. But I know it's an area of potential behavior. That's what's important. So I know if I lift off from here, this is too low. If I break down from here, it is currently too high. Then I got to look at what's too low. This. It's called a low volume node. I'm just going to put it on here so you can see. And this node is here before the market comes down. That's what's important. So as the day unfolds and the participant behavior gives us their footprint in the market, I know. And another piece about this liquidity traded out, most of it did, 242 buy stops, acceleration. I know now there's buy stops here, there's a sweep. And remember I said, what does a sweep set up? Potentially a counter rotation. So if you're in Trader Lab and you're using a high tier order flow tool like Bookmap, you already know on this acceleration that there's the potential for the counter rotation. Did you know that? I know it, but I don't know if it'll do it. So let's get real. But I'm prepared for it. So this is support. This is my counter rotation. Where's my location? Here. And where's my support? Here. If I get a buy trigger, which is what this is right here, I can get long. My stop can go under here, and this is my obstacle. But I am in an uptrend. This sets up the IB high. You remember the statistic from the top of the stream, and I'll look at your question soon. I haven't been able to look up yet. There's a 68% probability that we take out the IB high. 68%. And that happens at 9:30 Central Time, where the IB high, it's the first hour's high. So wherever the first hour's high is, now we're going to have that probability, past performance not indicative of future results, 68% to take this out. If we take it out, where am I trying to go? There and there. Okay? That's it so far. So let's keep going. This is a potential long. Now, you have to determine whether this fits for you or not. Here's your microstructure. Remember, support, sweep, counter rotation, looking for continuation. Right now, no shorts, only longs. Let's come back a little further. What is this over here? This is a retail price right here from this auction. These are like little stores down the street. This is resistance. Let's draw a little box around it. I just want you to highlight what this is. Because once you can understand what you're looking at, I think you might be able to do something interesting with it. So all this is here is a consolidation. Too high, too low, breakout. Okay, and the sweep for the counter rotation. What's the high? This outside edge there is the outside edge low volume node. Let's align a couple pieces. If you look at this, this is where we left this. Then we had a micro auction here, which is what this is. Too high, too low, too high, too low, retail. If this retail price in the store is too low, we're going to leave it. You can't buy an S&P here at the moment. So then we're going to go up. But because of the sweep, I know now I'm looking for a counter rotation. I get my counter rotation and I have my absorption right there. This is already on the map. And my outside edge. This is called a confluence. This is a buy trigger in the Trader Lab, microstructure. It's right. So right here, sellers are in control. Buyers are taking a shot. Sellers are here. Buyers are there. Buyers are here. Seller gets below the buyers. Sellers are still in control here. I come to my location and I am indeed clueless. What I am is watching for the behavior. Now let's watch. In this little structure right here, there's the sellers and the buyers are now, and I don't know this. This guy's absorbed. There's the buying icebergs. Now at this point right here, as far as I know, right? Now I'm going to show you the change. And again, I'm going to draw a little box. I'm drawing the boxes because I want to outline the order flow behavior and how you might interpret it. Obviously, I'm not drawing boxes while I'm trading, but I'm outlining what you're going to see on the profile so you can understand what is this and where's it coming from and why would I even trade with the profile. So the sellers are here, the buyer is here. I'm looking for a change in behavior. Sellers are now still in control under the buyer, going to zero. Okay, except I'm at a location, right? So I know I'm in an area of interest for me and I'm in an uptrend. So buyers are above the seller right here. As soon as this buyer is above this seller in alignment with the location and my volume is here, when I break here, I pull back. Right here is support and this is support. So here you can be a buyer in here or just buy it here and your stop is under here. And where are we going? Let's go back to, what we were thinking about. Well, maybe And where's my resistance? I got to talk about resistance. If I buy it here, my resistance is here. So this is my scale, very tight. It's a couple points. I can do this trade. And then my next resistance is this microstructure. It's actually there, which was created at, let me just see where this is. It's this, actually. Yeah, right here. So you can get long here, and you're looking for the IB high and up to the targeting. So let's just watch the behavior. Support is here because we broke out. Resistance now is here. And at 9:30, we have that high probability of taking out the first hour's high. So let's just look and see what happens. Where's our support? It's here. So you would be long here with a stop under here. You would understand what this says. This is the language of the market. We know this is our outside edge, and this is an opportunity to get long. This is a structured trade. Now, probably is maddening for you because when you see this, emotional, you think it ran away. But where's our support? Let me draw another little line here for you. Hopefully. So I have this, which is the top of this. Now, you have to put a limit order there, and your stop goes under here. So long here, stop here. Or we break inside it, and where do we come? To the volume, right there. On top of this, all of these are structured trades. That's a long. And where are we trying to go? Here and there, because the resistance now is sitting here. And 9:30, which is coming along, we have a high probability statistic over 60-ish%, 68, I think it is. You got to vet that. Those are available to all of you in the Bookmap Discord Trader Lab community and north of the border. So now we have another structured trade coming. I'm going to stop here. So all these are longs. There's been no shorts. If you see a short, it is a trade management opportunity in this configuration. So we have two specific trade plans working here. One is higher time frame, which I showed at the top of the stream, up. If it continues, who knows? Not our job. The other part is mean reversion trading, which is outside in trading, so rotational trading, this kind of thing, getting along in alignment, pulls outside, getting along. That's basically the trade we're in. Okay, coming up for oxygen questions. Let me take a quick look and we'll get back to this. Well, yeah, RP in YouTube is saying, he has a rule about trading the open. I continually reinforce in the Trader Lab that the open is the last place somebody wants to trade because you need to understand the other elements and have an understanding of market mechanics before you trade the open. There's no structure on the open. So it's it's like the Wild West in some ways. It's very fast, and you have to have unconscious competence to trade it. But the other side of the open is it's where developing traders, including myself, continually narrate. It's speed reading. It's really kind of what this is. This is a foreign language, and it's foreign to everybody unless you understand it. And when you speak a foreign language, what does it take you to learn a foreign language or play a musical instrument? So in many ways, this is language. So when you're first learning a language, you cannot speak fluently or quickly. You are speaking slowly and intentionally. And think about when you're learning a language, you don't know anything, and then you think you know something, and then as you develop a vocabulary, mentally you're translating the words in your head. So that all takes time, and you can't do it quickly. That's why, and I will continually say, do not trade the open. But there's some elements about the open we need to know. Often what happens in the open, especially on a two-sided open, is you're going to pick stops on both sides. That is, you're going to rotate. So what looks like a low may only give you an upward rotation, and then you come back and take out the early buyers and take out that opening swing low and then swing back around again. And it can abuse you both ways. So that's why it's a high-risk place to operate. But when you got an open like today's open, where it is rotational and compressing and it's balanced, balance leads to imbalance. And imbalance is what directional moves are built off of. So because the energy of a balance or a rotation, or is that energy, somebody's on the wrong side. And when that side discovers they're offside, it's going to light up the stops for those who are offsides. But while it's rotating, both sides are getting abused. So it's equal opportunity for abuse. But we are looking, because of the structure and the gap, that we're looking for long. So that was the general idea. Anyway, any other questions? How are we doing in Bookmap Trader Lab? Okay. So I don't see any questions. Let's move along. So this is our outside edge. This is our last long. Right here, long here, long here, long here. These are all Trader Lab stops under here. And then you're going for the statistic. So let's continue along. I get a sweep. What does the sweep suggest? Potential for counter rotation, right? Now, what else do I have? 9:30, I have the IB stat. Where's the IB? It's right there. So I know at 9:30, and this is my next target. So if you get long here, now I understand if you're visiting Trader Lab and you haven't seen me do this every day for years, you're going to look at this and go, how does he know? Let me answer that specifically. I don't know. So let's leave that up by the curb. What I know is what happened and how markets behave, and I know how to recognize behavior in micro by using order flow. That's what I know. Now, after that, I put a trade on. I know the same thing you know, which is the best I have is maybe. That's the same. Taking stops, doesn't matter what you're doing. It's overhead and cost of production. So we're not going to avoid losses. We're not going to avoid anything. But what we might be able to do is have a better understanding of where we should interact. And maybe we can measure it because it's consistent. Our behavior is, not the market's. Market is whatever it's going to do. So this is consolidation, and we have our statistic. It comes into play at 9:30, which is right here. First hour's high. We break. As soon as we break this is another target, by the way. And we're going, don't forget, 40, whatever it is our target is there. That's our target for this trade. Turns out it's like the high of the day, but who knew? No clue. Not my job. So liquidity is here. Break above the liquidity. Now I'm looking for a counter rotation. I have a sweep. Same thing here. I have a sweep. I'm looking for counter rotations. I'm not getting them. I held this liquidity. That's kind of supportive. When I break high, I get another sweep. Looking for counter rotation. This is support now. If I pull back, I have a structured trade in Trader Lab called the IB continuation trade. It is a long. Now I have to be conscious of the following. This is going to look very familiar to you. What do I have sitting over here? A low volume node. Remember, where did we get long last time? It was in the area of the low volume node. This was this, right? Remember? Out here, come around, come around. Well, if this is too low, and now I have a new distribution, and I have a location, a structured trade, if I come out towards this low volume area, isn't it potentially the same trade? And I have a target up here. Let's watch. Outside edge, IB, where's my support? Here, right? And I'm clueless. Not ignorant, clueless. Watch. long, right? Against there. Can you see it? Brian, it's the stop detector. It's not what we're seeing is market by order data, which is tag data, which comes specifically from the CME, lets us see what the order type is. The fact I'm seeing stops coming out, they're always going to be coming out. But I want to know if there's stops coming out, what's happening on the other side. So when we see delta, you're seeing stops. And most of us think of delta as an aggressor. Well, stops are orders being liquidated typically, but they show up as market orders, which means aggressors. Stop becomes a market order. So when I see the stops, when I look over here and I know I have my buyers here and I see the counter rotation, which I anticipate, I'm looking for it. I want the counter rotation because right here in the micro is an outside edge, and this is my support. Remember what happened down here? Same thing, the outside edge, and my support was below it, right where that green line is. You see? Support. So when I came down here, I had my outside edge for a long, and my support was here. The stops coming out are just showing me, that why are we coming down? Who are the sellers? Well, to sell stops. And maybe some initiators, I don't know. But I see the iceberg. So these work together, stop and icebergs. Limit iceberg orders. Why? And there's the passive side, which we don't see. And this is this is what order flow shows us. When you see an aggressor, like here, let's just call this an aggressor for a moment. Why did the market not go down? Well, it's 21 sell stops, 27 icebergs. So I got buyers who are taking the other side of the stops. And here's another piece, just to give you a little more insight. 24 sell stops here, 16 sell stops here. What do you notice? 2 buy stops here. I'm getting sellers, but I'm getting less sell stops. Is that possible exhaustion? I'm just asking. And my support is here, don't forget. So, and I have my sellers. I got my sellers here. They're more aggressive. I got these guys. 21. Don't we think it's going to go down when there's more sellers, but it goes up? Now, here's what it says. Let's talk language. There's a passive buyer here, which I won't know until I'm on the other side of this volume. Then I know. I don't know what will happen. I just know. Then I have so I have all these opportunities to get long. But now I'm looking for the IB continuation trade. I have acceleration here. Okay. Low volume zone. That's what leaves this. And I look over at my profile and I go, oh, okay. I'm now in rotation. What is our condition? Rotational trading is called mean reversion. That's outside in. If we think the trend is up and we're going for this, then I can buy this if it's in my plan, and the outcome is always random. So let's not forget about that. But where's my support? I'm going to draw a little box. This is a consolidation. That's what it is. All this is. Nothing complicated about this. It's here, support, and there. And if you were to get long, your stop's got to be under this. So that's all up to you. Support. So the way you can work this, and it's all subject to how you want to operate it, and you can do this any way you want, is you can buy it here with a stop under here. You can buy it there with a stop under there. And I don't put my stop there. I put it like 2 ticks to 3 ticks below it, because we can test. The reason this market didn't go down is there are passive buyers here. passive. You don't see them. That's the limit order book. They're just fine. That's why the market went up from here. The buyers are here. Well, if I know the buyers are here, if the market comes down even here and maybe a little below it to pick off the stops under here, these buyers, if they still want the product, are going to go, oh, really? You put it on sale? Hey, let me throw a few more in the cart. So I know the buyers are here. I'm going to put my stop below here. Just a couple ticks. So I can enter there and I can enter there. And this is called the IBC. And then the next target is this. Let's see. Pull back to where? The volume. The volume. Just saying. This is kind of what I figured out over too many years. 45 years of trading, you figure a few things out. Now, when we came up here, I posted in the Trader Lab, I said, I am looking to get out. And I am not someone who's going to be rigid. We're in a business that's fluid, so rigidity. So if this is my target right here, and I'm looking at this and I'm going, well, this is coming in the book. So I got liquidity coming in, and I'm seeing more liquidity start to come in. This is algorithmic because you can see it's just coming in. It's not, this is more meaningful because if you look, there's 244 up here. So when that shows up, and then I see more added below it, I'm perceiving that there are sellers, in the limit order book, and I can see their orders. That's what the limit order book is. So I'm seeing, and I look at this like a little bit of a lid on the pot, just the way I look at it. So let's keep going. So buyers are here. And by the way, where's the high volume? We can use the high volume. I'm just going to throw some more lines on here. The high volume is there. We have micro high volume here so far, so support, this is a little resistance right here. I just look at these nodes and I go, what created them? Well, that's too high. You see the seller? Well, trend is up. This is too low. See the buyer? This guy was absorbed. Come to support. The buyers are here. Buyers are here. Resistance is here. You can break this down any way you want. And where's the support? Well, now it's here. Buyers are here. Buyers are here. Sellers take a shot. I break high. Where's my support now? It's kind of here and here. And my resistance is this. So for me, and I posted this in the lab, and by the way, it's just luck. It's nothing more. I saw this, and what did I see here? I see exhaustion. I see all these selling icebergs going off. I see buy stops going off. I got my target. I'm hanging out. And right here, I got out of the trade. Right here. And here's why. I see the buyer. I see sellers. I'm looking for the target. I get my seller below my buyer. Micro high volume is right there. Buyers, seller below. Warning, Will Robinson moment. Support. Sellers. Buyers. I see a big seller. So this guy's under the bus, and the sellers are taking over. This was the last shot for the buyers right here. So the buyers are in control. I see this seller. Where's the buyer? Here and there. Support. So far, so good. I got to get above this guy to go higher. I get above him. Still going north. Going north. Buyer is above the seller. Buyers are in control. Break here. Then I see my seller. My seller now is below my buyer. My seller here was below my buyer, but the buyers are here. So I have this compression or auction, and I have a target. So I'm at my target. I'm going, do I really care about this? No. So right here, I punched out of the trade. I just said, I see more volume. I just got out of it. and it's luck. Because otherwise, I'm trailing under here. That's it. So right there. So what do I know now? Too high. And what about this? Hasta la vista. Thanks for playing, Tom. We'll send you a nice gift basket. VPOC. Remember? Let's look at this. I'm going to label this. This is called the volume point of control, and it is the highest volume for the day. Now, we have more structured trades in TraderLab. Now, whether or not you want to trade this stuff, you have to vet it. So what do I know? Too high? What was support? Breaking it. What about here? Breaking it. Now, right here, we get VPOC migration. I did a webinar on this. It's in the TraderLab if you're interested in it. And what does it mean? This is the whole thing about this. What does it mean? Foreign language. Well, here's what this means. For the whole day, this is the highest volume. It's a retail price. And there's a couple possibilities. We can either push this way and come back here, or if we break below it, that means maybe it's too high and it sets up a short. And that would be against this. So right here, I get my selling. That suggests short in the TraderLab. Now we're trading a counter trend, or you're just out. So let's watch it. And now let's see. I haven't seen any of this, so I don't know what's going on. I'm just going to narrate it. So this is too high. This is a short. How do you get short? Let's show you the structure. Sellers are here. Buyers are there. So I'm going to put a little line around, a little box around this. It's a consolidation. So I don't know, anything until I get a resolution, which is here. Sellers take control. So it's, sellers are here. Buyers are here. Break low. High volume is there. I come back to where the sellers took over. This is a potential short. Stop would go here and then follow the yellow brick road. And where's the stops? VWAP and mid. So for me, the target, if I took a short, is VWAP per scale, and then manage the trade. Let's see what it does. Let's see where we come. Now, this is variable high volume node. What is this? Variable high volume node. Let's label it. What's happening is this yellow line is representing the highest volume for the day. And let's think about this in relationship to what it truly is. It's shopping and valuation. This is what the auction is. What is this thing worth? Well, since the auction is really dynamic, it's a constant real-time process. What happens is during our session, what was too low can become too high. And then if the pricing starts changing, it might suggest that we found too high. And we don't know. Not our job. Our job is to get an alignment. Now, if you think the trend is up, you would not take longs. You would not take shorts. You would just be waiting for your next long. If you trade both sides, and the fact that we went to that level up there and didn't get to it might mean it's too high. If it's too high, we can be taking shorts. And then the targeting is VWAP and mid for the short. Because why? We can anticipate retail trader behavior at the VWAP and mid. What do? They buy. Well, if I'm short, I want to get scaled in front of their potential buying. And then either they get run over and it goes lower or not. So let's look. So this is where, for me, the primary target is. And where else do we come? I know this is going to shock you. What is this? There's our outside edge. What's under our outside edge? Stops. So if I look back, I look over here, I know there's an outside edge. It's a swing. What's at outside edges of swings? Stops. That's pretty wild. those are sweeps. Let's take a look at these sweeps. Well, I just want to have it opened up so you can see it. I didn't. You open it up. Oh, there it is. Okay. Let's try to look at this. Now, when something like this happens, I can't do anything with it. I'd love to tell you, yeah, no problem. No, it's a problem. Where do we test? Overnight volume point of control. Where are the stops? Under here. This thing is so fast, I can't react to it. I can't. So I can't do anything with this. Now, I'm not currently trading, of course, because I'm with you here. I cannot trade this, but I understand what happened here. I know that this is too low. I know 27, which is right here, that line, that orange line, was a key number to get across to come up to our target at 46.5. If I come back to it, it acts the same as that does. That's resistance. This is now support in a higher time frame. So I have support and I have resistance. So I'm in this thing. And then it could do whatever it's going to do. That's, the joy of randomness. So I come back to the overnight volume point of control, retail from the ETH, fair price down there, and I come back to the higher time frame point of control. Both of these overlapping areas are high volume, think shopping, and I get my reaction. Now, if I'm out, I got to try to figure out how to get into this thing, right? Where? Let's look. So I found too low and it ran away. Now I got to find a rotation down to get aligned for continuation along. Let's see if we get one. So where's my support? Well, I have right here, I think this is, what is this? The mid right here. And I have the mid. I blew everybody out here. Thanks for playing. No way in here. So now we have to watch. Resistance is here. We have our volume here. This is our support right here now. And we break above it. Let's just see if we get location. You bought this, you take a stop. Our outside edge is still here. Low volume node, mean reversion trade. Let's look at this. By the way, I take stops and hope you don't think that anybody is immune. Buyers are here. Sellers are here. Location, outside edge. No way to know. No way to know over here anything. But this looked really, I don't know what this was. Maybe news, maybe not. Doesn't matter. We have no control over it. Doesn't matter. What matters is how the participants react to it. My resistance is here, and this is my outside edge. Okay? Remember, I had an outside edge up here, and we fell away from it. That sets up the next outside edge. And, of course, this an anomaly, and it is trading, so what are you going to do? Here's my location, which I don't know, except I know about this. Break high, trigger. Where's the entry? It's there. And then your stop is under here, and then you're going back to this. There. That's your scale. And now, wherever. Notice where it comes back. Let's come back. Microstructure, break high, trigger, test, long. Now let's come back. Scale ahead of the IB. This is structured trading. Where's support? Let's look. Support is here, and the top of this consolidation where we break out of. So you'd have a long here or here, subject to, and your stop is out here. And then this is support. This is support. So let's just look at it. See where it comes? If you understand how this works, you wouldn't necessarily, here's what's hard for us. Would you be able to put a limit order there and just let the market come down and pick you up with a stop under here? Or would you need, quote, confirmation? That means you'd be buying it here and your stop would be under here. I'm just asking. You have to figure that out. And where am I trying to go again? Here. Scale. Then what? Wow. Variable high volume node. This is resistance. And then you just manage your trade. I think we are current. Let me look up questions. I understand if you're looking at this and you're going, oh my goodness, you just isolate your trades and you match them up with what you see based on the participant behavior. And when you get out of alignment, you have the same joy I have. I take a stop. And I don't think too much about it other than emotional responses, anger, annoyance, all this, frustration, disappointment. Anything else? Fine. Okay. The casinos, when they pay a gambler, nobody gets depressed. Because the only way they make their dollars is by paying the gamblers, and they give them the cocktails and the rest of it. So we pay the other participants also. No way to know that it's going to stop here, is there? Outside edge is there, too high is there, and too high is there. Which one of these? Great question. Guess what? No clue. Not my job. So let's look. Micro high volume is here. Break high. Support. Buyers are here. Buyers are there. Break high. This can be support, or this is support. Buyers are here. Going to the moon. Don't you wish you knew? I don't know. Break low. Too high. Now what? If I can't get back here or back above this, then hasta la vista. Up to your trade management plan. Watch the structure. Question. This is Trader Lab. Any questions, guys? How are we doing in YouTube? How are we doing, guys? Any further questions? The idea of the Trader Lab is to help you understand market mechanics and to anticipate behavior. You can't predict it. You need to have a trade plan, and you just need to know what you're going to do before you see it in the market. if you have to ask yourself, what should I do now, whenever, and there is always uncertainty, so that's a given. You need to know what you will do, not what you should do. That's all in advance. You bring your plan to the market, and then whatever unfolds, you trade per your plan. If you don't have a plan where you know what you should do right here, right now, based on your plan, because here's the thing, this only might be a rotation out here, right? Well, your plan has to be specific to you. Do you hold the counter rotation and risk coming back under here? Or do you manage this, and when it breaks and we can't regain this, and you see this seller and you have a high volume structure here, this is a sell trigger, do you exit? It's a fair question, because the answer needs to exist already, not thrashing, which is what humans do, about what's the right thing to do. Should I hold it for here? Should I exit here? What happens if I missed, all that? This is not what you want as a trader. What you want is a process that can align with your psychology and, of course, the metrics, that, with a statistical edge, that over time, with a consistent application of anchored inputs, gives you a yield. That's our business. You can make it anything you want, and you can rationalize any kind of behavior. Uncertainty is a given 100% of the time. So the thing that needs to be certain is your plan, because you just do it. And you don't grade yourself on knowing what's going to happen, since you can't. Grade yourself on the work you've done and then following the plan, which should be based on metrics and tangible statistics, not how you feel about it. Support is here, but the exit is here, you see, subject to time frame. So you know support is here, an area, and that's because the buyers took control out here. This high volume at the moment is too low. You could be looking to get long. Why? There. What happened out here, which we had no way to participate in? There. So if you come out there and you come up here, and now this might be too low, then we are doing this. Subject to your time frame, you might be out of the long and you're in park, or you're in your Barca lounger, or not. Or you're under here because you're trading a higher fractal or time frame. Does that make sense? Any questions? This is a good time to ask them. I don't have a lot of time left. I want to remind you guys that the Trader Lab is available to everyone at no cost. There's a link in the bottom of YouTube if you're inclined. It's a community of like-minded traders who've come together to leverage their collective experience. We have new traders, and we have long-term professional traders who've been in the business a long time. Senior trader has over 50 years experience. I've got 45, both as a money manager and a lot of experience going back to starting in 1980. Ooh, quite a different world back then. No computers, no internet, nada, zippo. And technical indicators were brand new. They were just coming out where we could get our hands on them. Wells, Wilder, all that kind of stuff. So as that was developing, it was a very exciting time to get immersed in indicators and new indicators and hybrids of indicators. So it was pretty neat. Also, very difficult because nobody understood indicators and the problems that come with them. Because all we see with an indicator is a line crosses over, and look at that, the market went up. Notice where we just came. You see, if you understand market mechanics or market dynamics, you understand This could be a long, and this is your obstacle. Now, can you operate in this? Should you? I have no comment. You have to qualify your trades. Here's the thing about the auction. If you understand why this happens, not that it will happen, but why it might and where it might, then if there's enough range per your trade plan, you'd be looking at this location right here. There's the trigger. There's the microstructure for a long right here. And where's the resistance? It's right there. Can you guys see this microstructure? Now, I'm not saying you should be buying this. What I'm sharing with you is something that most traders don't understand. That's how the market works. Why did we go up from here? It's because there's passive buyers here. The sellers are in control here. Sellers are there. Okay? Well, when a buyer is above the seller, now there's a buyer above the seller here, a buyer is above the seller here. Okay? Right here, I'm looking, but I'm not at my location. Location, location, location. That's a real estate term. You've heard that? This is location. That's number one. The context is up. That's actually number one. This is number two. This is the trigger. This is the entry. There's the scale. Or I'll give you the next one. Subject to your plan. Now, for me, I want high volume in all fractals and time frames. So this is high volume in here, micro. That's why it didn't go down. The volume, the shoppers in this store, think of it like the store down the street, doesn't have a lot of participants in it, but there is a retail price in for S&Ps. And if we leave it and we come back and check it, and now it's too low, we go to the next location and check this price. Why? Because last time we were here, it was too high. It's too high, and we find too low. We can come back and check too high. Is this still too high? And is this really too low? How about the answer lies in what the participants do, not in you or me? Does that make sense? Location, resistance. If I can clear this, then I can continue on my merry way, and I have locations of behavior to observe. Now, if I can get above this, buy stops are here. Buy stops are here. So I have to be thinking a couple different angles. I have to think where I get long. I got to think where the guys on the other side of this leg have their stops. You should write that down. So I'm always thinking from both sides. I have to. I got to go, well, if we get up here, there's stops. If I can't get up here, then there's a problem maybe with this. So if I get long, that's why I have to try to get risk neutral. Job number one. And if this trade doesn't qualify, because this is my obstacle, then I'm not allowed, per my plan, to take the trade. I just wait for the next bus. Now, your FOMO is going to be thinking, oh my goodness, I got to be in, I got to be in. That's not what you do in the business. The business of trading is you got to wait for the trade that fits your plan and meets the parameters. That's what you got to do. The lunatic that resides in your head is called Hyde. Jekyll and Hyde. Hyde's the lunatic. You remember the story, Dr. Jekyll, logical and intentional, professional, and then Hyde, which is just emotions. Well, Hyde is crazy. And Hyde takes control of us. So this trade right here has to hold this outside edge by a tick or two. It looks like it's going to fail. But what was this? Resistance, too high. This is how the auction works. So I know if I get long here, this is my obstacle. I mean, I can't make this stuff up because it's happening right in front of you. What I understand also as a trader is I don't know what's going to happen here. What I do know is what did happen here, and that is we left it. So I know the price was too high. If I find too low, I can come back to too high. Does that make sense? Any questions before I fold up for the weekend? By the way, if you're interested in this in the Trader Lab, you're all invited. Use the link in the bottom of YouTube. There's also 60 PDFs of structured trades. These are broad strokes. I did these many years ago. This is 2021, 2021, you know. Just because traders were asking me. And I also worked on stuff with Bookmap developers. Some of the stuff you see on these charts were things I was working with the developers on. And some of them now are incorporated in some of the add-ons, and others went out the window from the 50th floor. You know how it is. But a lot of this is experimental. But up in here are the structured trades. And remember, I'm not a vendor. I'm just somebody who's been trading for 45 years, both as a professional and also sitting out here with you. And I've walked in your shoes a lot longer than you've probably walked in your shoes. Because when I started, we had no information, and everybody was a floor trader back then. There were no traders sitting off floor. So it was a pretty difficult environment to operate in for me, because I didn't know what was going on. I shared an office with George Lane. He created stochastics. So I went down the deep dive into indicator world, because I thought, George, you see an oscillator, and then we had MACDs, CCIs, pick them. They're all derivative. They're all the same. And that's what happened with technical indicators. You open up a toolbox, there's 150 indicators in there. Well, as a retail trader, you got a lot, your work cut out for you. An exponential number of possible mixes of indicators with multiple time frames. How many years do you think that'll take? And then where are you going to end up anyway? Question. So this is available, plus the library of webinars and the Trader Lab community. It's all available. There's no cost. And this stream will be available to Bookmap Discord Trader Lab participants to reverse engineer, review, circle, arrow, screenshot, and build out your trade plan. So what do we know? Too high. What is that? A sell trigger right there. So the way you might think of this is, if this, we know this is too high, we know that, and it's resistance. You can see why. If I get a buy trigger at an outside location and I take the long, what do I know? I know that's resistance. And I know this is too high. See? So I can use this process not to predict, but to understand what might happen and where. Then, if I'm anticipating potential, if I get through this, life is good. If I get a sell trigger, what can I do right here? I can exit the trade, and I know my support is here. The worst that would happen, assuming if I took the trade and it fit my qualifications, was I'd scratch. That's Trader Lab. Now, there's more possibilities here. We have to keep looking, but you might want to be observant if the long is over. We want to see more behavior here. You could be trading this from both sides. If you get a long, you can come back here. And this is rotational trading. Again, not a recommendation. You have to fit this process into the quote time frame you want to operate in. Right here, the possibility is to come back here again. Anyway, please give a thumb up. Give a like in YouTube. I'd appreciate it. Use the link in the bottom of YouTube if you're interested in visiting the Bookmap Discord Trader Lab community. There's no cost for it. And there's a lot of additional education in the Bookmap server. Stocks, options, crypto, order flow with a high tier tool like Bookmap, swing trading, options, dynamics, market maker behavior, algorithmic, and there's so much more. But if you're interested in the Trader Lab, this is really a good time to get involved. Download those 60 PDFs so you can see a high-level overview of some of these processes. You need to reverse engineer and fit them into something that aligns with you psychologically. And there's a library of webinars that'll kind of show you this in real time. Some of them up to almost 5 hours of real-time narration, just going through the trades. And if that's something you're interested in, it's all available to you. Use the link in the bottom of YouTube. There's no cost for it. Thanks again, guys. Please give a like on the way out. And remember, this stream's available exclusively to Bookmap Discord Trader Lab participants. If you want to review it, come over to Trader Lab. You'll have the weekend. You can cuddle up with this and reverse engineer some ideas and then vet them and incorporate it into a structured trade plan where you can repeat consistently behaviors that you can measure. That's how the casinos operate. They only play games that have a statistical edge that favors them, and they're in a similar environment to us, completely random. Is that something that might help you on your journey in trading to understand the environment you're in, how to work in a random environment that is 100% uncertain at all times? There are ways to do it, and it might be very different than what you think. So come to Trader Lab. Maybe it'll be a great place to stop by on your journey. Thanks again, guys. Don't forget the like on the way out.